One of the most shorted stock right now is GEO Group. About 17% of the shares outstanding of float and 33% of the float. This is nowhere near GameStop, where over 250% of float were short and over 100% of shares outstanding. But still, there is a possibility that GEO Group goes through a short squeeze because it happened in the past that other stocks, even with 20% of their float being shorted, went through a short squeeze. And the most famous example would be Tesla, which went through several short squeezes. Another example I can give you will be our Edge. Today we are going to talk about GEO Group, but of course we'll compare it with these other companies. We will try to understand what is the catalyst that may cause a short squeeze with GEO Group. I have been investing in GEO Group since last year and so far making a good profit on GEO Group compared to the rest of the market. This is one of the reasons why I'm beating the market this year. And if really we are going to see a short squeeze, of course then I will be happier. In recent weeks, the stock price of GEO Group has been going up. So if this keeps continuing, then the short sellers will be forced to buy back shares and it can eventually lead to a short squeeze. So this is basically what a short squeeze is. If you have never heard of what is a short squeeze, this is how it works. We have the short sellers. They want the price to go down. So how do they do that? They are going to borrow the shares from someone. Let's say I own shares of GEO Group. I want the shares to go up, but the shares are just sitting and doing nothing. Maybe I want to loan these shares to someone else. So I loan the shares to the short sellers. They are going to sell the shares on the market, over the open market. And then when the shares goes down, if they are right, they are going to buy back the shares, return my shares to me, pay me an interest because of this loan, and then they take their profits. This is how short selling works. The maximum amount of money you can make on short selling is 100%. You cannot make more than that. So if you're short selling a stock for $100, you cannot make more than $100. But the amount of money you can lose is infinite, because if the stock price goes up and you have been betting against it, you will lose all that money. So if let's say it's at $100 and you want it to go to zero to make the $100, but it goes to $200, so you lose that $100. It goes to $300, you lose $200. So that's why I don't recommend anyone shorting a stock, because the amount of money you can make is limited, but the amount of money you can lose is unlimited. And it is especially worst when we have a short squeeze. When there is a short squeeze, the number of shares that those short sellers have to buy in order to repay are not available. So then they are going to try to buy as fast as possible, and this is going to increase the price. And the more they are trying to buy, the more the price will go up, the more they will try to buy, and this is what escalates into a short squeeze and the price just shoots up. The most famous example will be GameStop, but I think the biggest example, the one that we need to talk about the most, will be Volkswagen Group in 2008, because it was a much bigger company than GameStop, and at the time, at the peak of the short squeeze, Volkswagen Group was the largest company in the world. So you see, short squeezes can be very big. But of course, the most famous example and the one that made me the most money would be GameStop. What about GEO Group? Today, about 33% of float are shorted. What's the difference between float and shares outstanding? Shares outstanding is the total number of shares that is in existence. But float, this is the theoretical amount of shares that can be traded in the market. So let's say the insiders, they own the shares, but they are not really going to sell the shares. There are some restrictions on how they are going to buy and sell shares. So that's why this is not accounted in float. There are big institutions, pension funds, they cannot buy and sell shares that rapidly. So this is not accounted in float. So the float in theory, why I'm telling you in theory, because it can be less than that. There are some institutions that maybe are not going to sell their shares, but they are not accounted to as restricted shares. The short squeeze happens, it's not the shares outstanding that matters, it's the float. And when we know that 33% of float is short, this can cause a huge issue, because the stock price is going up, and those short sellers, if they start losing money, they will need to buy back, and the more they buy back, the more they will keep pushing the price up. So maybe we are already seeing a short squeeze. You will see that at some point in the past, the number of shares of GEO Group being shorted was actually higher than today. But then the company was diluting their shares. They had a lot of debt back then, they were diluting their shares, and the short squeeze didn't really happen. Today, this is the opposite. And this is one of the catalysts that may cause a short squeeze if GEO Group decides to buy back shares. So far, they are focusing on repaying their debt. This was the main concern of Wall Street, of the market. The company took a lot of debt because they were a REIT, a real estate investment trust. And when you're a REIT, you're forced to pay 90% of your profits as dividends, which is not something that easy to do. And many REITs, they end up taking debt in order to pay those dividends. But now that they are not a REIT, they are not compelled to pay 90% of their profits in dividends. Actually, they are not paying any dividends at all, and they are focusing on repaying their debt. They have improved their balance sheet so much over the past year since they stopped being a REIT. They did not only repay their debt, they also moved their debt to longer maturity. So the debt that were due in 2024, 2025, now they are not here, they are due in 2028, 2027. So they can take more time to repay this debt. Of course, it increases the interest on the debt, but overall, I think they are doing a good job cleaning the balance sheet. So if they keep doing that, at some point, the management may say that it is not so important to repay debt anymore, because any healthy company needs some debt, and they will decide instead to buy back shares because their shares are cheap. So if they buy back shares, this lowers the shares outstanding and lowers the float and increases the number of shares outstanding short and the number of float short. This is exactly what was happening with GameStop. The company was buying back shares. In one quarter, the company bought 35% of its shares outstanding, and this precipitated into the short squeeze. Some people are saying that the short squeeze happened because of Wall Street bets. No, it would have happened whether Wall Street bet was here or not. The main reason why the short squeeze of GameStop happened was because the company bought back 35% of its shares outstanding in just one quarter. This considerably lowered the float, and the short sellers, they had no option other than to buy back as fast as possible. Yes, Wall Street bets did contribute to it. Maybe it accelerated the process, but it did not cause it. Another difference we can see with GameStop and GEO Group is that GEO Group doesn't have the same catalyst that GameStop had. They have other catalysts. The main catalyst with GameStop was the new console cycle. So even though in the past years, the revenues of the company, the profits of the company was going down, the market was actually wrong looking at the net income of the company because of impairment of goodwill. It did not show us the reality of the company. Free cash flow was always positive. So for GameStop, the catalyst was the new console cycle. This was going to increase sales. And then a new catalyst came that Ryan Cohen invested in the company. He completely changed the management. So things were going to get better. They had a deal with Microsoft. So all of these eventually led to the short squeeze. Of course, there was Wall Street bet, but they came at the end. And you may be thinking that this is new. Actually, it's not new. It's not because of Reddit. It's not because of Wall Street bet. They would have come, the speculators, in some form or another. Speculators have always been here. During the tulip mania, we did not have Reddit back then, but speculators were here, and they caused prices to go up. It's the same thing. I don't know if this time it will be Reddit, it will be something else, with GEO Group or another thing, but speculators are always here. They come last, they just shoot the price up, and then they leave. So you as the investor, you have to be careful knowing when to invest and when to sell, when to take your profits. And I was able to take profits on GameStop at $420 a share. I bought at less than $3 a share. Let's go back to GEO Group. What's the difference between these two companies? GameStop too was repaying its debt. Same thing for GEO Group. But apart from that, for GEO Group, there is no other catalyst. Actually, there is a negative catalyst if you think about it. The Biden administration, they signed that executive order banning the Department of Justice, the DOJ, from renewing its contracts with the private prisons. I'm not going to focus on politics and how it affects the investment. It doesn't really matter. What matters is that even if they are losing revenues from the DOJ, they are gaining revenues from the Immigration and Custom Enforcement Acts because of the crisis we have on the southern border. But overall, it is not a catalyst because it's just replacing one revenue by another. There is no catalyst for GEO Group compared to GameStop. There were so many catalysts. Maybe someone will come and invest in GEO Group, an activist investor, but I don't think it is necessary. The management of GameStop was bad. It was necessary for activism, but here for GEO Group, it's not that necessary. The reason why they took that was because they were a REIT, and it's not because of poor management. So what will cause a short squeeze if it happens? One of the things that may cause a short squeeze will be if the company repays their debt, their balance sheet becomes cleaner, and the credit rating agencies, they keep improving the ratings of GEO Group. So they are already upgrading the debt of GEO Group. So if this keeps happening, then maybe investors, institutions will say, this is a company we can invest in. It's not going to go bankrupt. So it's not really a catalyst, the fact that they are cleaning their balance sheet. But if this continues, maybe more people will be interested to invest in the company, and also the company, they can buy back shares, and this can cause a short squeeze. Apart from that, I don't see any catalyst. Maybe someone, a big investor, comes and invests in the company. But apart from that, it's not GameStop. It's not going to be the same thing. And even if a short squeeze happens, I told you the same thing with GameStop. It should be looked as a bonus. This is not what we should focus on. I invested in GameStop because it was trading under its net cash value. The company had a market capitalization of $200 million US at some point, with $400 million US in cash minus the debt, net cash. So it was a deep value stock. GEO Group today, I won't call it a deep value stock anymore, but it is still a value stock. The market has overreacted to the news that Joe Biden signed that executive order. The market has overreacted to the news that they are not going to be a REIT anymore. But the company, you look at it, things are not that bad as the market is thinking. So this is why I invested in GEO Group. Of course, if we see a short squeeze, I'll be happy. My profits will be bigger. But this is not the reason why you should invest in a company. If you're interested, you can read the full analysis of GEO Group on my research platform. If you're interested, you can have a 1 month free trial on the research platform along with my investing course for beginners there. And another thing, if you're interested to learn more about short squeezes, I don't know where on YouTube you can get a better explanation about short squeezes than on my channel, because I made so much money on GameStop. So please, if you're interested, please watch that video about GameStop, the whole story. Have a nice day and goodbye.